Good evening, friends. Today I have an update for a company called PSP Projects Limited. It's an infra company. It has backed an order of 107 crores from Brigade Projects Private Limited. The shares of this company gained 2% after the company backed a order from Brigade Gujarat Projects Private Limited. Market cap of 2,541 crores, trading at 640 rupees, a possible increase of about 1%. However, the price would have changed further. This is an update that I got about a couple of days ago. The shares of this project have seen a positive movement after the receipt of the work order for civil construction and finishes work for BIFC 2 building for Brigade Gujarat Projects Private Limited at GIFT City, Gandhinagar, worth 107 crores excluding GST. In the institutional category, the project is supposed to be completed within a period of 24 months. The company's financial performance revenue decreased by 10% from 696 crores to 623 crores in Q3 FY25. The net profit slipped by 81% from 32 crores to 6 crores. Order book 6,417 crores, marking a 44% year-on-year growth, with 55% from government and 45% from private projects. It has secured 10 projects, including the largest residential project in GIFT City and key developments in Lakshadweep and Vishram Guru at Civil Campus. As of 31st December 2024, there are 58 ongoing projects. 87% of the projects are based in Gujarat, 6% in Karnataka, 4% in UP, and 2% in Lakshadweep. Till date, the company has completed 233 projects since its inception, and with for 82% private projects and the balance with government projects. Partnership with Adani Infra. The company has partnered with Adani Infra to acquire up to a 30% stake from the founder-promoter. This strategic move is expected to boost visibility for construction orders across Adani Group companies, with management anticipating increased order inflows and significant long-term growth opportunities from the collaboration. The company expects a 2,500 revenue, with order inflows of about 3,500 crores. For FY26, revenue project is about 4,000 crores, supported by Adani orders and ongoing project. Margins are anticipated to improve to 9 to 10%, driven by efficient project execution and expanding order pipeline. Provides a wide variety of construction-related services for industrial, institutional, government, and residential projects in India. It offers services throughout the construction value chain, from planning, design to building and post-construction operations. So, important disclaimer: the view as investment tips expressed by the experts, broking houses, rating agencies are of their own, and those are taken from the internet. Investing in equities poses a risk of financial losses. Investors must therefore exercise caution while investing or trading in stocks. The author, which is myself, not liable for any loss caused as a result of the decision based on this article. Please consult an investment advisor before investing. So, continuing further to what we've just been through, just a second. Okay, there we go. So this is the current scenario. The company's stock price is slightly corrected today. Overall, you can see it is about 0.75% up in the last 5 days, 1.27% value add in the last 1 month, then about 8% in the last 6 months, and a negative 8% return in the last 1 year. So the ownership strength is slightly missing the benchmark. The stock is at a premium valuation at this point. The company knows very well with the utilization of its assets, so it's doing well. The company possesses stable growth and a good history of manageable debt. Price to book value 2.1, face value 10 rupees. Book value 303, cash of 225 crores, debt of 455 crores, promoter holding 60, earnings per share last 12 months is 16 rupees 84 paise, sales growth is 29%, so I think this is an outdated update possibly related to last year. Return on equity 15%, profit growth -6%, return on capital employed 19%, 2525 crore market cap. Then you can see the other companies with a decent sort of market cap and price. You can see ranging from 1,000 to 3,000 crores market cap. Prices vary from as low as 6 rupees to 600 rupees or 800 rupees. Sorry. What is important is the ROC and ROE. So you can see here you have negative return of 9% from Kolte Patil, then AGI Infra 26% return on equity, Arcade Developers 47%, Kesar India 41%, Arihant Superstructure 12%, so PSP with 14.45%. So some other companies with a better return on equity are something to look forward to. Uh, Promoters 60%, public 24%. So the stock would be highly volatile considering the amount of public investment structured in this company. We've been through this. It was awarded the fastest growing construction company below 2000 crore turnover in October 2023. Global Awards 2023. Completed 219 projects, so incorporated in August 2008. Sorry for the background noise, friends. Government 47, institution 37, residential 10, industrial 9, government residential 4% order book. High of 746, stock PE of 38, book value 302. Uh, we've been through some other figures. So companies' debtor days have improved to 50 days, which is a good sign. Meridian sales growth is about 33% in the last 10 years. Contingent liabilities of 808 crores, which is a sort of concerning. Company's cost of borrowing is high. Promoter holding has decreased by 10% in the last 3 years. Working capital days have gone up from 55 to 95, which again is a concern. Then some other comparisons to some other peers. Some stocks available at a very cheap price. Market cap is lower than PSP projects, about 1000 crores. Return on capital is what would be something that would be important to consider. So you can see here Garud Constructions 49, then you have Ascon Engineers 8. So Raswanath Developers -5 ROCE, that's why it's available at a cheap price of 23. Then BL Kashyap 67 rupees. BL Kashyap has a decent ROCE 15%. So sales you can see uh, more or less stagnant, a little bit fluctuating up and down. Profit has dropped. Net profit has dropped from 34 crores to 6 crores within a period of 6 months. Then operating profit has also been inconsistent and fluctuating. Sales have grown, however, operating profit hasn't grown as much as expected. Though operating profit has reduced overall, the net profit has also reduced in the last 12 months, so sort of a concern for the company. -8% stock price, -3% sales growth, -57% profit growth. Return on equity in the last year has dropped from 19 to 14. Then reserves have increased, which is a good sign. Borrowings have reduced, which is another good sign again. If further scope of improvement in reduction of borrowings is possible, then debtor days reduced to 50, which is good. Days payable also reduced to 198. However, inventory days have gone up by about 50%, 55%. Working capital days have doubled from 42 to 95. So some challenges and some concerns that the company has to look into. So overall, thanks for watching the video, friends. Please share this with your friends, family and associates, those who may be interested in getting more insights about this company. So thank you for watching. We'll connect with another video very soon. Take care. Have a great weekend.